Welcome to the stream. Pretty excited about this one. I want to break down today. We're going to do our daily review. We'll get through that quickly, and then I'm going to break down what I'm looking at and candle science of the daily candles and how that ties in with the 5-minute model and SBS. So let's get into it. Don't think you've caught a session with me. Oh, welcome, Mark. Well, nice to have you in here, and I hope you get something out of this. Please ask questions and make this stream as interactive as possible. All right, so starting off on the day, we had this huge sell-off. I'm just going to move this down here. We've had this huge sell-off from Wednesday. Come back down. We've set up our day before any of this has happened. We've put on our PDH, our normal setup, PDH, PDL, OTE of the daily range, and we've done our fixed range volume profile. We want to see where the large orders are coming in this whole sell-off down. So we can see we have some large orders in here. This is also unmitigated. So the buyers that are in here, price never came back to mitigate those orders. So they're basically trapped orders in here. Same as this swing here. Have a 5-minute swing up here that caused this breakdown. This was also unmitigated. And then we have our main POC, our point of control here from the swing down. So the main volume coming in here at the lows. When this happens, this is a good footprint or signature, we could say, for price to find some stability here for a retracement to come back up. So starting the day from Asia, I was looking for either this zone here. This is our Q3 New York PM zone. This took the low. We come up, we've had our change in state delivery. We've got displacement. We've got a BPR in here that we're looking to hold for support. And if this doesn't hold, then we're waiting for a PDL sweep into continuation up just to come back and mitigate some of the orders up here and ideally come back to that OTE range. And we'll go over this again when we're looking at the daily candle breakdown. So coming into Asia, we've opened up here in Q1 and we've come back down, testing the BPR here, unable to sweep the low there. And we come back up, close above the zone into the 2100 macro, but then that 1 hour's come back down. And at this point, we had ES sweeping PDL. So now we're still within this zone. We've got SMT at the low because ES has made the lower low and come back up, and NASDAQ is the stronger asset. So then once we come back out here and we flip the CB in here, and that's where I was looking for longs for the second time. So I was long in here originally and looking for targets from this New York PM manipulation zone for the day, which held for the whole day, to SD 1.5. The reason I was only looking for SD 1.5 is because it was above our New York PM high, which we have here. So I wanted that to be the draw for Asia and a push up to here and then just consolidate and then make a plan from London from there. A lot of the time when we get large expansions down like this, price will only come back into that daily candle to 0.25, which we have over here, which was pretty well aligned there with SD1, SD 1.5, and then you can see continuation down. So we wanted to play it quite safe yesterday and just hit that first TP point, SD 1.5. So looking for longs, we had one entry here up to SD 1.5. Once we had this displacement higher, I'd moved stop loss to break even and then was taken out on this move back down. And then second entry after the SMT and the ICB flip here. Plus we also had that 7-9 soup there. So we had two of them actually. So this was a 7-9 soup here, which helped for this entry, and then another one here, plus the SMT. And we come back. So second entry was here, and same target was SD 1.5. Which then took into London. So pretty much consolidation here for Asia with that additional manipulation swing here. Nice. So if we look at the SBS, I didn't have that one drawn up. So from this break here, and then that was a 3, 4, 5. So this would become the two there. So 1, 2, and this 4 becomes the SMT because ES gave the break of 2. As an epic trade, Jess. Surprised I didn't hit 1.5 or not. I know, it was pretty frustrating. I like sitting through this until London Q2. So then we get London does the manipulation below true day open. So we have our true day open here. We get manipulation below, and then we can draw on an additional zone. So now we have our zone stacking, right? We have our New York PM zone, which held, and then we have a London Q2 zone with a breakout into another SBS. So we have 1, 2, 3, 4, 5. And that next swing pushes us up to SD 2.5 from the standard deviations from this manipulation, and up to our main target of SD 1.5 here. For people that were getting in on this trade, this is one of the ones where it needs to be straight off the zone. As soon as we had that breakout, really, it needs to be a marker order because there was no movement back in to the zone to then push up. I'll get rid of this one. So ideally then we're looking at orders here, which is also within the 2 o'clock macro. So for the 2 o'clock to then open low to the high close. And then targets for London, SD 1.5, 2.5, 3.5, 4.5. And then we can follow the price as we're breaking out with the SBS. So that's the whole idea of SBS, is to then help follow and to allow us to stay in the trade. So our breakout becomes 1, come back for 2, we break the high of 1 is 3, and then we're looking for sweeps of 2. So we sweep that for 4, and then price continues up to hit the high of 3. That's your SBS target. And then do the same thing over here. So we have 1, 2, 3, 4. We're looking for sweeps of 2 to get in. And then we can target 3. Or we can just use that with alignment of each take profit level on the way back up. And ideally, if we had more accounts on from here, we could then still be targeting the larger ones, 2.5, 3.5, and 4.5. And using this to then align with SD 2.5. So this was our main manipulation and standard deviation level of the day. Any questions? Everyone's very quiet. So as we go into New York, one of the better all-night holds, yeah, definitely. Just had to sit through that zone consolidation. Potential SBS at the moment. I'm not going to go into the current price action at the moment because we'll run out of time. So I just want to go through our daily review and then some candle theory. But you guys are welcome to discuss that in the main chat. I haven't hit myself to SBS. If you enter on a sweep of 2, what is your stop loss? So when you enter on 2, ideally your stop loss is below the low here. Yeah, spot on, Jess. The algorithm, SD 4.5, 0.79, so good. Additionally, if you're looking for tighter stops after the sweep of 2, a lot of the time 5 will sweep 4, right? So you can wait for that and then get in over here and put your stop loss below the 5th swing. Or if you see a swing failure pattern like this, we can enter here on the close of that swing failure pattern. We can enter there, stop below. We don't want candle closes below 50% of that wick. So this is something that we've that I put in the mentorship to talk about. And then you can do your target. So either for the 3 to finish off the SBS, or we can continue this to our next lot of standard deviation levels. And that gives us a tighter position. Yeah. Alrighty, so we go into New York, and the New York manipulation was that 4th swing. So we can then draw another zone on. And now we can work with these standard deviation levels, also paired with our main one of the day here that we have. So we can see SD 4.5 lining up nicely with our SD 4 and 4.5 here. This would be another one where it's as soon as we break out. We didn't really get the close there until that 8:30 news, so a bit tricky there to get in unless we were trying to front run it, like entering off the say the BISI here, or if we'd done that SFP entry for continuation. So news has taken it straight up to SD3 there into a retracement. So we have our breakout again, 1, 2, 3, going straight up to SD 4.5 there. Some more algorithmic delivery to the tick. And then we can also do a OTE swing right from here. And price comes back to that 6.2. So we're doing our OTE swing from that 1 to 3. This is where we're looking for 4 or 5 to come in. We want 4 and 5 to be within that 6.2 to 7.9 zone for continuation. So Q2 manipulation into the 8:30 news, into a SBS reaccumulation, and then pushing back up to that top zone here. Mitigating the orders used here to manipulate price. So yeah, pretty nice London into New York AM. There. So then once we've reached that SD4, 4.5, we've come back up into that zone. We're into quarter 4 now. So we have a sweep here. This is 11 o'clock macro. So 11 o'clock candles open high. Come back, unable to close above, and then we get our breakdown here. So this then creates our quarter 4 zone. We don't have any inverted BISs in here, or FVGs. So we can just try and look for entry. It didn't quite get that body break there, which is a bit annoying. Normally we want that body to break the zone, and then we can wait for that retracement back into the zone, and we have our stop back above here. So ideally then we can look at the bearish OB for an entry. Minus OB. So after this move, a stop would be above the high. Like so. Targeting, same thing, 1.5, 2.5, 3.5, and 4.5, but only getting to 2.5 here. Some more nice clean delivery to your standard deviation level. Just had to take a bit of heat here if anyone was in there. At the end of that 11 o'clock hour. So that 11 o'clock hour is pretty much a doji there. So once SD 1.5 is reached, then we're looking at, especially after this displacement here, your stop loss will go to break even. So you get 2 TPs, SD 1.5, SD 2.5, and then other accounts, if going for 3.5 and 4.5 into the PM, would be stopped at break even here. So a pretty nice day and fairly cleanly delivered with that main manipulation for New York PM. Any questions on this day? I'll just grab a drink of water and we'll jump into the daily candle theory. Bear with me for a minute. Alrighty, quiet class today. Let's say I'll get a clean chart. Just change over here. We'll turn off time and price to make this a little bit cleaner. Aside from the 3 red candles in a row, there was literally nothing showed it's going to be a bullish day. Did you notice anything earlier except for the Asia SMT? So I wanted Cryptic, I wanted to move back into the OTE or back into daily range EQ into continuation down. And because I trade Asia and London, I wanted that move up to happen into New York. So that was the idea of getting that Asia London. And that's why I was only targeting SD 1.5, right? So I could just get that move back up before price retraces and goes to attack PDL. But then it becomes a bit more complicated because PDL was swept by ES. So then that sort of starts to, if PDL was left by both, then that allows more conviction for price to do the OTA retracement, and then we can attack PDL. The other thing to remember is that when get rid of PO3, when we're in bearish trend, you still tend to get 50% red days, 50% green days overall. So still be prepared for a day to then turn green. It's not just going to be red, 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 red. All right, so we'll have a quick look at this. So with the current daily, right, and as we're following trend, so as we're coming up and we're getting bullish daily candles, you know, the next candle we're looking at open low, high close, and we want the open low of a candle is, we don't want, it's what it does is it's going to come back into the previous candle each time. Same as here for bullish continuation. We're coming back into that previous daily candle and then we're expanding up to the high. We come back in, when extremely bullish, this is why we're looking at just those 0.25 levels, and then we push up again. Especially, this is a Wednesday. When we're getting a Wednesday candle, a lot of the time, that is expansion of the week, and that just takes off. You know, so if you can get on a Wednesday or Thursday expansion, especially with that being aligned with the weekly, if we're thinking about a weekly candle coming open low and then pushing up, you know, a lot of the manipulations happening on the Monday, Tuesday, and Wednesday and Thursday, we're getting the body of that weekly candle. And that's when you can see it only just drop back in a little bit and then expand up. Drops back in a little bit, expands up. So, same when we're coming back down, right? We get our bearish candle here. The next one's going to open high. We're coming, retracing back into that candle and we're pushing back. So then the question becomes how, with our using our 5-minute models and sessions, can we look to map that out and capture that? So let's draw on a couple of daily candles and map this out. Might need to change time frame so I can put a few more lines on. All right, start this again. So we have a bearish daily candle. Which one am I using this on? Okay, so this, let's say this is a bearish daily candle and then we're going into our next day. We then, candle opens here. Still probably gonna need a lower time frame. See where that, where's my drawing? All right, here we go. Okay, so our new candle opens, and what we do with our daily chart setup is we're putting on our PDH, our PDL, and we're doing our OT of that range. Like so. If we put the 2.5 on as well. So our next day opens in Asia at 1800. We open here. If we're going to get an Asia high of the day and an expansion down, a lot of the time we can look for 1800 just to open straight up within that first 15 minutes and then break structure. and continue down like so, especially if it's just going to be a huge expansion out of Asia. We can then incorporate SBS with this. So we have our break is 1, retracement is 2, which is where we're getting in, right? We have that break here. And then we go into an SBS. So if we finish this here, we can then draw on a standard deviation. Oops. Like so. So this would be an extremely bearish day with just a small retracement back to 0.25, like a Wednesday or Thursday. And then we're looking for expansion down here to be the body of the next daily candle. Change this to white. So once we reach SD 1.5, we then look for normally seeing an SBS. And the idea of that is that it becomes a redistribution fractal. So we have our breakdown is 1, get a retracement for 2, we break that low for 3, and then we do something like this. We get 4, so we're breaking above 2, and then we continue down to SD 2.5. Once we break that low, that starts another SBS. So we have 1, 2, 3, and we're looking for manipulations above 2, and then to continue down into 4. So this is what a bearish continuation Asia would look like. At 1800, we have our open high, we break, come back down to SD 1.5, we then get a reaccumulation, and then let's say this comes into London, right? We have manipulation for London here. This would be our Q3 manipulation, sweeping 2, which can then be used as another standard deviation pull here for continuation. Everyone still with me? And then this can come into New York AM, or like this could be London in here, and this is our London manipulation. So we have another standard deviation pull from here, which is part of that redistribution. And then, so this could be a London manipulation, and we can target all of these, all in line with this Asia manipulation here for the daily candle. And this could be our New York AM manipulation for continuation down as well. Then once we hit that SD 4.5, then you just tend to get those consolidation ranges right to finish off the day. Like so. So all of this is then forming another bearish candle. Chris, do I take into account the quad witching options contracts tomorrow? So lower overnight. You just mean for the current price action? I don't really, yeah. Not really, man. Like I just sort of take it day by day, and I plan out the week. So I'm not worried about contract changes at all. I'm just worried about what's printing on the chart and how can I measure and catch the expansion of what's printing on the chart. All right, any questions on this, guys? So this would be an Asia bearish continuation. Now let's go through what a London bearish continuation will look like. Oops. So same thing, we start the day off the same. We do that fixed range volume profile POC within this daily candle as well to see where that volume price is coming in, so we can align that with PD arrays. If we're going into, draw this a bit bigger this time, if Asia just consolidates, so we have our open here, and we just see an Asia consolidation range, maybe it grinds up a little bit. Then we go into London. London can push up into that 0.5, and we get a London high of the day at 3:30, or between 3 o'clock and 4 o'clock, and then we get our change in state of delivery, a retracement at 4 for the 4 o'clock macro into expansion down. And then we do the same thing. So we would use this as our zone. And then we're looking at our take profit points, 1.5, 2.5, 3.5, and 4.5. As we get to each one, we get down to 1.5, we can look for a reaccumulation fractal. So we have swing back up is 1, break of that low is 2, 4 and 5. And we're looking for a continuation down, and we want that to align with that SD 2.5 and the next line. And we can then do another standard deviation pull from there, which is ideally in the next session. This would be a New York AM to align that with continuation down to 2.5, 3.5. So we start to get these standard deviations stacking across sessions for extra confluence. And when you see this, right, everyone's like, it's bullish, we're going to keep going up. So just because we get that break of structure here. So a failed 5-minute change in state of delivery model is the SBS continuation. And that's why you get such big movement here, because everyone's just getting wrecked from there, being on the wrong side. So same thing, we hear SD 2.5, let's say this is going into the PM. We then get our 1, 2, 3, 4. We get our Q3 manipulation in the PM into continuation. Can then do another standard deviation pull for the PM. And we want that to align with our main daily target from that first manipulation swing of SD 1.5. So wick would be up to here. Body would be the open there. So then we have a open high, low, close. I do this on the 5-minute. On the 5-minute, and then so for the weekly, high there. And then for the weekly, I do this on the 1 hour, and I pair that with the weekly candle exactly the same way, except instead of sessions here, we're using days, right? So this could be a Monday, or it could be a Tuesday. So let's say this is Monday here, and then we get a Tuesday manipulation. We sweep Monday's high, and then we go into Wednesday and Thursday expansion here. And Friday, which is similar to at the end of the day, you're getting an NYPM, right? Let's say NYPM comes back down to here, and then we just get some consolidation, or we come back up to just like a TGIF, right? A 0.2 or 0.3 retracement, creating the wick of the daily candle, in this case, the weekly candle. So Friday, continuation into TGIF, creating the wick of the weekly candle. And then if we look at this on a monthly, we're looking for quarter 1 of the monthly, quarter 2, quarter 3 into expansion, and then quarter 4 to consolidate and then come back, creating the monthly wick. In this situation, for a bearish continuation after this candle, this is based on a expansion week with a Friday low. Yeah. I'm not trying to talk exactly about the current price action, just candle theory in general. So now we'll go through and we're going to explain what's just happened with the daily. And what I was looking for yesterday, which we've just gone over with that daily review. And what we normally can see happen as well, which didn't in this case, was when we get that PDL sweep. So we've had our bearish daily candle. At the end of this candle, we had a New York PM zone, a change in state of delivery at the end. That was part of this wick. Went like this. So when you see this at the end of a session on a day, within the wick there, move that over now, that's when I'm grabbing that zone for the next day. So this is what we've just had play out. And this became our New York PM manipulation zone. And we've had, from this whole swing here, we had our point of control was down here where this zone was created. So then starting the next day, which is what we've just had, I've gone and grabbed a standard deviation pool from this low, which created the wick of the daily candle. And I want to get retracements back up into here. So I want price to come back in, creating the wick. If we were gonna, didn't know at the start of this next daily candle if this was going to be another bearish continuation candle, but we do know that we're going to get a retracement back into that daily candle, and we can measure that when we get those New York PM manipulations like that. We can use that to start the day, and this zone stays current until that low is gone. So that's why I was targeting SD 1.5 there, which was just below that 0.5 from Asia, to come back up into that previous daily candle. And so then Asia's done this, come back down, we put in an SMT here, ES has swept the low. So now the idea of price coming back and closing back below the low is less, because New York is showing more bullish structure and putting in the lower, the higher low compared to a lower low like ES, and then we get another breakout. Then we come into London and we get another zone within a zone. So now we have another standard deviation pool. We also have the unmitigated order blocks in here, which these are starting to align with. So have 2.5 aligning with SD 4.5 there from London. So then as we go up to SD 1.5, we look for reaccumulation. So 1.5 we get reaccumulation, 2.5, and then ideally expansion to 4.5. So we have our breakout swing is 1, retracement is 2, we break the high for 3, and then we're looking for sweeps of 2 to continue up to that next main standard deviation level. And then same thing as we're going into New York. So this was that New York quarter 2, right? Comes back up. And then we can do another standard deviation pool here as well. And it's also putting us into that OTE area of that previous daily candle. Is everyone still with me? So retracing back in. So on those other days, we're looking for the retracement and then to come back. Because we swept the low already, we can just keep re-entering and working with that movement back into the candle, until it's not valid, until these low zones that are creating the breakouts, until these lows are getting taken, we can just keep riding that trend back up, and then we can wait for reversal up here around that 7.9. Cool. So when you look under my mentorship, we've got the opposite of this. So we're looking at the bullish version. If we put that on. So ideal bullish version, we come out of a bullish day. And then for Asia, I'm normally looking for either a manipulation in here from New York PM that created that wick. So there's a few different options that we'll get, and then we're doing a standard deviation pull from there. So I'm going to drag that across. Need the numbers on the other side. And other ones that you can get. So it's why I like to do that fixed range volume profile POC as well, because if we have a strong POC in here, then there's more chance of that PM high holding. And other times you'll get the PM high swept, and we'll do this into Asia. Maybe say an 1800 high from the next open. And we sweep PDH, and then we can do our standard deviation pull from here down to the low. And normally we have a New York PM low or another session low down here, and that's what I'm targeting for the candle to retrace into the daily candle, into continuation back up. So we get an Asia, change of state of delivery, come back down. We have to do our OTE retracement, look for PD arrays within here to get in, and a macro time. And we're looking at our TP levels here. Also have our OTE drawn on of that previous day. And then we're aligning these SD levels plus PD arrays within the daily candle, or FVG even, because once we break out, price likes to come back, rebalance the fair value gap, and then push up. So then we can have Asia coming back in. SD 1.5. 1, 2, 3, 4, 5. This becomes a London manipulation, and we come back down into a New York AM, and then we get our bullish reversal here. So then we've got 2 TPs on the way down. So we've got a fair value gap here, or PD arrays within here. We sweep London low, we swept Asia low with London, and then New York 930 here. And we do our standard deviations back up. And we're looking at the TPs of session highs aligned with these SD levels, 1.5, 2.5, 3.5, and 4.5. And all of that is building the next daily candle, which would end up looking like this. So from the open, wick comes down to OTE of that previous candle, and we have 2 bullish days. And this is what you've seen me map out in my mentorship that I have. This is my ideal day for bullish continuation, where we get that push back down to these SD levels. We create inner range liquidity. We come into New York or a London low of the day, and then we push higher. Yeah, sneaky indices. And same thing like we discussed on the really bullish days, like a Wednesday, we can just come back to 0.25 here. Right, if we're going to get an Asia low of the day, we would just come back into like 18 or 1900, push down. And this would be the New York PM manipulation from this wick. And Asia will come back to that 1.5, we break, and then we go. And in that situation, then we have a PDH flip. Get rid of this. I got about 10 minutes, guys, and then I got to shoot. I'm trying to do this as quick as I can. So the really bullish days, we have our OTE drawn on. 0.25. We have a PM manipulation, which created the wick here. We come into Asia. If we do a standard deviation pull from the PM session, come back down to that 0.5 level. Then we get a change in state delivery here. This becomes the low of the day in Asia between 18 to 1900. And then we push up. We then get a PDH flip. This becomes the wick of the next daily. We do a standard deviation pull from here. Say it's up about here, right? We come up to SD 1.5. We go into a London reaccumulation at SD 1.5. So we have our breakout, 1, 2, 3, and then 4, 5, and we expand up to SD 2.5. And this becomes, so then everyone shorts this, thinking that's a manipulation, but the manipulation is this swing here, and we push back up. We flip this for support. So normally this becomes Asia high as well. We have Asia high here. So we might even come back down a little bit. We flip Asia high. We can't get back below it in London. And then we get a new standard deviation pull from here for London. And this continues on for our bullish expansion. We then hit, say, SD 4.5 of Asia, 1.5 of London. We go into a reaccumulation again. So we have a breakout. 1, 2, 3, 4, 5. And then we push up again. And this, I need to be zoomed out more so I can draw these a bit better. So this next leg, this becomes our New York AM manipulation. And so these are building the daily candle. And we're trying to take profit at each of these SD levels. So this would be a really bullish day. So our open is here. We expand up to SD 4.5 of New York, or say just get to the London one, which lines up almost with SD4. And our wick was here. So it came down to previous day 2.5 and we expand up. So as this is all printing out, we're just trying to map out these manipulation zones. This might have even been, say we had a New York low was back here and we sweep New York PM low for Asia, and we come back, we flip the low and we push up. We come back out, we break above PDH, break above Asia high into a manipulation, retest Asia high, and then we get another breakout. We come back out, we're retesting London high for New York, manipulation, retest London high, and we get our breakout. We continue up to the next SD level. All right, any other questions? That time went really quick. Get rid of that, go back to our daily. So I hope that helps explain why for each day, I start the day, I draw on PDH, PDL, I draw on the OTE, so we can get those levels. We look for PD arrays within the daily candle. And then we're looking for bearish continuation, we want price to come back into that daily candle. So during Asia, we can look to catch price coming back up into a like a London manipulation continuation down, or a New York AM continuation down, and we can keep hitting PDLs until they stop working. Is all of this described in my channel? Yes, it is. Yeah. I just wanted to try and put it all into one stream with the daily candles to give you an idea of each subject that I'm using. So we're using the 5-minute change state of delivery to measure the expansion. We're measuring the expansion of the 4-hour candles, and sometimes that is just the daily expansion as well, which we saw today with that New York AM, New York PM manipulation. That was the main manipulation of the day. If we go back to the 5-minute, this swing here was the wick of the previous day. And so we want to get in that manipulation wick, and we want to ride the candle back up, expecting to be making the high wick of the next candle if we're just going to get bearish continuation down. So we're measuring that from here, 1.5, 2.5, 3.5, 4.5. So the whole idea of these standard deviations is to catch that body or wick expansion of the next daily candle, or the H4 candles. H4 candles is why we have the 5-minute with these ones inside the sessions. So this went on for continuation of that next 2 o'clock H4 candle. This one here is for the 6 o'clock to 10 o'clock. Yeah, I've got this recording, so I'll post this one as another masterclass in my channel for this one. So a lot of you guys will be seeing my charts like this, and you're like, you got 3, 4 standard deviation levels. What the hell am I looking at? Plus the session, low and highs. All I'm doing is using a main manipulation. I want to use a previous session high for my draw. So for Asia, I'm looking at that New York PM high, and I want SD 1.5. Then for London, I'm normally looking at Asia high if Asia was up here. And I want to get that swept and push up for another standard deviation level up to SD 2.5. Catch another 4-hour expansion. So hopefully that helps break down everything you're seeing on my charts and what I'm actually looking at. And all of this is just a open low was here. So daily candles open low, high, close. And we're trying to catch the guts of the daily candle. And this could have just been the wick, and the guts is back down here. Then we look for this in New York AM or London. All right, guys. Thanks for tuning in. It's been a fun one. Are we bullish or bearish today? I'll jump back in and have a look in a sec. I need to close the stream. And I'm about to head off shortly for a holiday, but I'll have a quick look at the daily chart setup before I go. Thanks, guys.